So, hello and a warm welcome to our next episode in our What Property series of PCS Pods. So, I'm Kate Forsdike and I'm the Director of PCS Legal, and today I'm joined by Mark Burton from Mark Burton Mortgage and Protection Services. And today we're going to talk about remortgages. So, hi Mark, thanks for coming in today.
Hi Kate, thanks for having me.
So, what are the benefits of remortgaging a property?
Yeah, I'd say the main benefits of remortgaging really just gives you the ability to be able to look at more options as opposed to just choosing a new product with your current lender.
Yeah.
Because then that means, especially at the moment with the way interest rates are and up and down and hard to keep on top of, it then gives the client the ability to look at all of the options that are available really. So yeah, I'd say that's probably the main benefit.
Yeah. Okay.
And potentially giving more flexibility to potentially do other things like apply for additional borrowing if that's what's needed.
Yeah, sure. So, should I always choose a remortgage when my fixed term ends? So usually that's every 2 to 5 years, isn't it?
Yeah, most of the, if it's a fixed term, most tend to be 2 or 5 years. Sometimes you get 3 as well.
Yeah.
Not necessarily. There may well be. It all depends really. So if I'm seeing a client, for example, I would always look at what products are being offered from the current lender.
Okay.
But also compare that with what's being offered elsewhere.
Yeah.
And we'll work out whether it's worthwhile remortgaging to another lender, because there's the ability to do that when you're coming up to the end of the term.
Okay.
But there may well be a good enough retention rate with the current lender to make sense to stay with them.
So it's not always compulsory, is it, to do it?
Certainly not compulsory. And it may well be the right option to stay with the current lender.
Okay. So say if my fixed term was coming to an end, when should I start looking to possibly remortgage?
I always say 6 months. 6 months seems to be a good, the right time scale. And that's actually come to more to light recently with the mortgage charter that came in last week, which is led by the government. And the mortgage charter was all about giving people the ability to be able to review their mortgage in sort of more in advance.
Yeah.
And 6 months was the figure as well. Whenever we are, and I know other broker firms do this as well, when we're reviewing existing clients' products, we would look at those that are 6 months ahead.
Okay.
So it's quite a good time to start having a conversation.
Yeah, and just look at what's around.
And just having a conversation, talk about the client's circumstances, so that if the rate is going to go up, for example, in 6 months, at least they know what's coming.
Yeah.
And how to budget for that.
I'll be prepared then.
Yeah.
So when I remortgage then, so what sort of information would I need to provide to my broker or someone like yourself?
Yeah, normally for a remortgage, because a remortgage is taking your mortgage to another lender, is basically what a remortgage is versus just staying with the current lender, which is known as normally a product switch or a rate switch.
Yeah.
For a remortgage, it's a new mortgage application with that lender.
Okay.
So typically the documentation that most lenders would ask for is identification, pay slips, normally for the last 3 months.
Okay.
If you're self-employed, then that would normally be the tax calculation summaries for the last 2 years with the tax year overviews.
Yeah.
And bank statements as well. But they would be the main things. And we would also need to have information about the existing mortgage that the client's got as well, along with mortgage account number of balance and all the rest of it. So, but they're the main. There might be other documents, but they're the main sort of documents that are always asked for.
Okay. So what if my circumstances have changed? So since I started taking out my original mortgage, so if I changed jobs or started a family or something like that, what sort of effect would that have?
I guess that just depends really on what has changed. So if, for example, it's a case of having to give up work and then earning less, the recommendation is I always say to my clients, whenever there's any change, a life event or any change, speak to me, because as a first point of call really, because it might be that we need to sort of revisit the mortgage and see make sure it's still affordable.
Of course,
I can contact the lenders, or we can contact the lenders on behalf of the client. But also, I would always recommend, if you're not talking to the broker, is to talk to the lender. Always make them aware of the change there.
Okay.
And that's not just about the mortgage as well. It's also about ensuring that you can stay in that property from a protection perspective. So, there's just had a new child and changed jobs, for example. It might well be that there's no longer any sick pay available. So if the worst was to happen, are you going to be able to still pay the bills? So there might then be a protection need to talk about.
Yeah.
Which is something else that we would always talk about
that's good thinking, really, because it's something you wouldn't really think of as well, isn't it?
Yeah, exactly.
So how long typically does a remortgage take to go through?
That does depend on the nature of the remortgage. And when I say that, I mean as in, is it just what we refer to as a like-for-like remortgage, which is just basically remortgaging what you've already got to another lender.
Yeah.
That can happen quite quickly. From a conveyancing perspective, there's less work than what there would be for a purchase, because that's normally where the timescale takes the time. But typically, I would say probably on average between 4 to 8 weeks.
Yeah.
About 4 to 8 weeks. But then that does also depend on the expiry of the current product.
Okay.
If I'm talking to somebody and we have agreed to remortgage and we've secured the rate, it might well be that the existing rate, which is potentially lower, doesn't expire for another 4 or 5 months.
Yeah, so you want to wait really and get your money's worth, as they say.
Yeah, especially at the moment. Stay on that rate for as long
as you can.
So we would then work with the conveyancer to ensure that doesn't complete until the existing product expires.
Okay. Yeah, brilliant. I know from a conveyancing point of view, they usually take about 2 to 4 weeks, don't they? So it's usually pretty quick when we get going. So are there any fees involved when remortgaging?
Fees-wise, there may well be a fee associated with the product, but that's with any product that you take. So lenders would always offer a product with or without a product fee, or application fee, they might call it. And that just depends on the circumstances at the time when we're running the sourcing for the client. We may well advise that actually it's better value to have the one without a fee with a slightly higher rate.
Yeah.
Or it might well be worth paying the fee because you're getting that much of a lower rate. That's the conversation we would have at that time. So that's probably the most common fee that's involved. There are a small amount of lenders that might charge a valuation fee, a basic valuation fee, which tends to be about £100.
Yeah.
There's one mainstream lender that does that. And there may well be broker fees attached to it as well, depending on the level of work that's involved.
Yeah. Okay. So how does the remortgage process differ from applying for a new mortgage when purchasing a property?
It doesn't differ that much with regards to the documentation that the lender will ask for.
Yeah.
They will ask for the same amount of documentation. I guess the main difference would be like evidence of deposit.
Okay.
Purchasing a property, whereas if we're remortgaging, it's obvious where the deposit is coming from. It's in the property, isn't it? So that would be a difference there. Not on, I guess, timescales. It's a much quicker process when remortgaging, and as you would know, the conveyancing process is much less than what it would be for a purchase. So less work for the client and for the conveyancer as well. So because of that, naturally, the process is a lot quicker for a remortgage than what it would be for a purchase.
Okay. So are there any sort of potential downsides to remortgaging?
The potential downsides to remortgaging, I'm just trying to think off the top of my head what that would be actually. So I can't really think of any. I guess if you're remortgaging, and I guess the main potential disadvantages in remortgaging, if you're needing to get onto a new product quite quickly, and the existing lender's product that they're offering isn't very valuable compared to what you can't afford to wait. It might well be that you need to remortgage, and it might take 4 weeks, for example, and your products might have expired in that time.
Right. Okay.
And that has happened, and then there might be a period of time where you have to go onto a variable rate, maybe for 1 month or something. So that, I guess, that's probably the most obvious. And that's just down to timescales, but that then highlights the importance of reviewing it at 6 months ahead.
Yeah, of course, it gives you the time then to look at things.
Yeah, but life takes over sometimes, and it's difficult, isn't it? And you might leave it to like a month before, which can sometimes cause a bit of a problem.
I think probably where people are so busy, it's not really something you think of as a forefront, really, is it? Until you get into the point where your mortgage rate is expiring. So, and
also, especially with the rate environment at the moment.
Yes, of course.
I've found that people are putting it off because they just don't want to face the fact that there is a higher rate, understandably. So that can also cause delays as well.
Yeah,
starting the process as well.
I think it's really important to try and do it as early as possible, so you know what's coming, don't you? With the increase in the rates at the minute. So, have you got any other tips for people looking to remortgage your property? Is there anything you could advise them as to how to go about it, or?
Well, the obvious one I'm going to say, and obviously I'm a broker myself, and I've got my mortgage business, is talk to a broker, to a decent broker, because the reason why I say that is, for the point I mentioned earlier, I've seen lots of examples where clients have chosen their own product through their current lender.
Right.
And one, they could have maybe got a much better product elsewhere.
Yeah.
And two, they may have chosen the wrong product because they don't get any advice doing it that way.
Yeah, of course.
I've seen instances where the client has just chosen the lowest rate, but that's meant that there's like a £999 fee attached to it, for example, which has then been added to the loan because the client's chosen to do that, and then pay a lot more interest than they should.
Yeah.
So I think what a broker will do, and normally as a free initial consultation, is just to explain to the client the best options and how to go about doing that.
Yeah.
So that would be my biggest tip, really. And also have your documentation ready, because if it is a remortgage, just have that documentation ready, the pay slips, the bank statements, normally for the last 3 months. Make sure the ID is all up to date as well.
Yeah, all these little things,
Because again, if your ID isn't up to date, then you have to apply for ID. That can take time. So in that time, your mortgage product might have expired.
Yeah.
To just be prepared, really.
So if you get a product, how long does that tend to be valid for? Say if you found something.
Yeah. So when reserving a product, what would happen is the process that an application would go in if it's a remortgage.
Yeah.
And you get what you call a mortgage offer. Typically, the mortgage offer lasts for 6 months.
Yeah.
Again, back to the reason for 6 months.
Yeah, exactly.
So very unlikely that the products will expire, and it's different for the product switch because you're reserving the rate anyway.
Yeah.
Another tip I would give as well, another reason for having a broker do it for you, is that the broker will monitor the rates.
Right, okay.
It's very topical at the moment with rates going up and going down as well. Hopefully they will start to come down. What a broker will do and what we do is we monitor our clients' rates whilst we can. So in the lead up to when the product starts and the rates reduce, we will just reduce the rate.
Yeah.
Go direct to a lender, they just won't do that.
Yeah, okay.
That's another little tip I'll give as well.
Yeah, so definitely instruct the experts, because that could save you money in the long run anyway, couldn't it? So,
definitely. I've just had one recently where we reduced the rate 8 times.
Oh, wow.
Yeah, so in the space of 4 months, we reduced the rate 8 times.
Wow, that's crazy.
In a period where rates kept coming down, and it actually meant, I'm trying to remember what the figure was, I think from start to finish, it ended up being about £280 a month less from where we started.
Yeah, that's amazing.
Through all those decreases.
Yeah, so no, that's really important, I think, because it's trying to get it done as early as possible, but also maybe not complete it until nearer the time, really. So
yeah,
brilliant. Well, thank you so much for coming in today. Thanks for all your help and advice. It's been really helpful, and I definitely think our listeners will get something out of this. So thank you very much.
Thanks for having me, Kate.